The Iran strike news and its impact on oil markets. Let's bring on Rob Thummel of Tortoise Capital Advisors. He's joining us from Kansas. Rob, thanks for coming on.
Thank you.
So let's start with oil prices. Obviously, we're seeing a spike right now, but we were talking just a moment ago with one of our colleagues who covers this closely. The idea that people now concerned about higher oil prices in the next few days, next few weeks, might be getting a little ahead of themselves. Everything depends, of course, on what Iran does next. What are you seeing and expecting?
Yeah, I think we would share a lot of the same sentiment that your colleagues have. You know, we saw an attack on one of the largest oil infrastructure facilities and one of the most critical infrastructure facilities in the world in September, and then you saw oil prices actually spike initially, but 14, 15 days later, oil prices are actually at levels below where they were before the strike. So obviously oil prices are up today. We'll see where we go from here. But at Tortoise, our perspective is we still think oil prices will remain range-bound, $55 to $65. It won't really cause any major impacts, at least right now, on a global economic expansion that we're seeing across the world.
And Rob, to that point, I know Tortoise actually focuses on energy infrastructure. When you think about your own investments, you're actually investing in pipeline companies. You're trying to really develop that. A lot of this talk about energy independence in the United States feels a little bit overblown, but in light of this sort of incident, how much do you think that the U.S. can really kind of stay immutable or sanctioned in from all of this geopolitical activity?
Yeah. No, and that's a really important point. So there's a couple things there. So if you think about it, at Tortoise, we've talked about how the energy sector has been underappreciated. It was the worst performing sector basically in the last decade. And we think that is unjustified. And events like this really highlight the critical nature of energy and energy assets and energy infrastructure assets, if you think about it. So today, as we sit here today, it's way different than 10 years ago. And what I mean by that, a couple big things. The U.S. actually is now a net exporter of oil, right? So that's really important, because if the world needs more oil, the U.S. actually can supply the globe with more oil if necessary. But more importantly, the U.S. relies significantly less on oil from the Middle East. So we are importing oil that is at levels that is 30, 40% lower than we've been historically. And actually, oil imports from OPEC and the Middle East are actually at the lowest levels they've been in 30 years. That's a really important component, and all of that's happening because of the fantastic things that have happened in the U.S. energy sector, both on the oil and gas producer side, but also energy infrastructure side as well.
And Rob, as you look at your projection for oil in 2020, you're looking at 55 to 65 as that range for oil, but that's kind of $7 to $10 a barrel higher of a range than we were looking at through 2018 and 2019. So what is kind of, in your view, fuel this move higher in the price of oil, just in terms of the range that you expect it to sit in? Because during December, we did see oil move back towards that $60 a barrel level. We're up a little bit today, but I think if you hadn't been paying attention, you wouldn't have known the kind of move that we'd seen in just the last couple of weeks.
Yeah, I think that's a very good point. I think what has happened in oil prices, obviously today and going forward for a little while, there will be an increase in geopolitical risk, and that premium that will be in oil prices will be there for a little while. We'll see how long. But more importantly, fundamentally, what's happening is global demand for energy is actually rising. And I think as we move throughout 2019, there was a question of what would global oil demand be. As we moved into 2020, investors have become more comfortable that global oil demand actually is going to rise, and it's going to rise pretty substantially in 2020 and beyond. In addition to that, though, the supply side, right? Global supply is coming down. In other words, we just had an OPEC event where OPEC agreed to reduce production even more. We've got U.S. producers that are moving to become more disciplined, and what that means is they're going to spend less capital next year. If they spend less capital, their production will be lower. So U.S. supply growth will be less than what it's been historically. And so you've got a much better fundamental picture, a much more balanced oil market with rising demand, a little lower supply, and that sits pretty well for oil prices where they are in that $55 to $65 range.
All right, Rob Thummel at Tortoise, thanks so much. Really good stuff.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.